If you're wondering what's happening in the San Francisco real estate market, this update is for you. Today I'm going to walk you through the year-end data for 2025 for the city as a whole and provide a preview of 2026 so you have a clear picture of where the market stands as of this new year. Let's get into it. First off, in 2025, the year really started off with a bang. Then when the new administration came in at the end of January and news of tariffs really took center stage, that really put a damper on the market for really all of the spring. The spring market really was flat last year, and this is historically not the case in the city. Typically, San Francisco in the spring is the busiest time of year for the real estate market. That slowdown continued into the summer, where traditionally sales in San Francisco slowed down anyway. Then in the fall, something really interesting happened. Interest rates had progressively inched downward during the year. Then right around Labor Day, there was an influx of new listings that hit the market, and the fall really was what saved the year. It was an extremely busy fall, followed by a traditionally slower winter, but that is to be expected during the holiday season. So now let's get into the data. So let's start with active listings. Year-to-date active listing inventory has been down meaningfully year over year from 2024. The month supply of inventory is down about 44% year over year, landing at about half a month. This means that inventory is compressed, and this has persisted throughout 2025, not just seasonally. This is very typical of the San Francisco market, where a lack of inventory is always an issue. Okay, so let's look at sold listings. Year-to-date single-family closed sales are up 5.9% year over year, increasing from 2,173 sales in 2024 to 2,301 in 2025. Despite higher prices and affordability constraints, transaction volume has improved. Now let's look at the median sales price. The year-to-date median sales price for single-family homes is up 4.6% year over year. It now stands at $1.74 million. Next up is days on the market. Year-to-date, days on the market are down 6.9% year over year. They've declined from 29 days in 2024 to 27 days in 2025. So this indicates homes are selling slightly faster on average than they did in 2024. Okay, now let's look at the percentage of properties that sold over the list price. Year to date, 72.4% of single-family homes sold over the list price compared to 71% last year. So competitive bidding remains the norm in the city, not the exception. So here's the big takeaway for single-family residences. Inventory has stayed tight all year, prices are trending upward, and buyers continue to compete aggressively for well-positioned, well-priced homes in great neighborhoods. All right, let's switch gears and look at condos, TICs, and co-ops. Let's start with active listings. Condo inventory remains elevated relative to single-family homes in the last year, but supply is really tightened up. Month supply of inventory is down 43.5% year over year, and it stands at 1.3 months. So this signals a clear shift from excess supply towards a more balanced market for condos. Let's look at sold listings now. In the condo market, year-to-date, sales are up 13.1% year over year. This is an increase from 2,347 sales to 2,655 sales in 2025. And this is one of the strongest year-to-date improvements across all property types, so good news for condos. Let's look at the median sales price for condos now. The year-to-date median condo price is up 1.3% year over year, which now stands at $1,143,000, which means price growth is modest, but it's been positive and consistent. All right, let's look at days on the market. Year-to-date condo days on the market are down 3.4% year over year, decreasing from 58 days to 56 days from 2024. So liquidity has improved steadily throughout the year. Let's shift gears and look at the percentage of properties sold over the list price. Year-to-date, 35.3% of condos sold over the list price. That's up from 31.3% last year. This reflects a growing level of buyer competition relative to 2024. So here's my condo year-to-date takeaway. The transaction volume is rising faster than prices, inventory is slowly shrinking, and buyer behavior is becoming more competitive. Condos are clearly in a recovery phase, which is great news. So what's the big picture as we compare the year-to-date data from 2024 to this past year of 2025? First of all, inventory has tightened across all property types. This is pretty typical in San Francisco. Inventory is always an issue. Sales volume is higher than last year, and prices continue to trend upward. Homes are selling slightly faster, over the asking price, and competitive sales remain common. whether that's for a single-family home or a condo. So what can we expect heading into 2026 in San Francisco? Personally, I think the market's going to be very healthy. I think we're going to see a bit of a comeback here. I don't think there'll be dramatic rises in prices, although I think they will go up slightly. And one of the main factors that's going to contribute to that are interest rates. We briefly saw interest rates last week hit 5.99%, and that's an important psychological factor for both buyers and sellers. You'll see a flood of new buyers come into the market if rates stay in that very low 6% range, and of course if they dip back down into the 5s. That will increase competition for properties citywide of all types of properties. And of course that will lead to more competitive bidding for those properties. And for sellers, I think psychologically it's great as well, because sellers who have been on the sideline and thinking about selling the last couple years have not really gotten off those sidelines. Now with more activity coming, with more buyers in the mix, I think sellers will start to see that they can get a little bit more for their properties than they had previously in the last few years. It's also psychologically great for sellers because some of those sellers who bought during the pandemic era with 3, 4, 5% interest rates now feel a little better about perhaps giving up those rates and downsizing or making the move that they've been putting off, knowing that they can still get a pretty decent rate in return. So thanks for watching. I'll be back next month with another month-over-month analysis of what's happening in the San Francisco market. Always feel free to reach out if you have questions. I'm always happy to help.